are live.
All right, what's the date today?
Today is April 17th, the 2025 year. And I believe if it's not today, it's certainly soon.
Okay, so Benjamin Graham wrote The Intelligent Investor in 1949, and Warren Buffett read it the next year in 1950 when Warren Buffett was 19 years old.
Okay.
And in the book, The Intelligent Investor, they Benjamin Graham suggests a portfolio of 60% stocks and 40% bonds. To this day, that is a standard that people kind of think that's the standard portfolio, as if there's no possible way to improve on that. However, in the book, Benjamin Graham writes, if inflation is out of control, you probably don't want to hold bonds. Well, guess what? Inflation's out of control. You don't want to hold bonds.
Mm-hmm.
Now, I gave a Uber ride the other day to some dude who works for Ecolab as to manage the treasury. I don't know if he's in charge of the whole treasury or if he's a financial analyst. I did most of the talking, which was dumb to do on my part because then I didn't learn anything. He probably learned a lot from me, or
Mm-hmm.
probably was thinking like, "Oh my god, my dumb Uber driver won't shut up." More likely, but um, he was he was saying that they do like a 70-30 because they and we were discussing like I was discussing like, oh, like most financial advisors can't even beat the S&P 500. He was like, yeah, it's kind of hard to do that. And I'm like, fuck, no, it's not. I beat the S&P 500. He's like, really? I'm like, yeah. Why don't you? And I was like, don't worry, I already know why you don't. The reason you don't beat the S&P 500 and why no financial advisor beats the S&P 500 is because they're not trying to beat the S&P 500. That's not how they keep their job. They keep their job by not having a drawdown. If they have a 5 or 10% drawdown, they lose their fucking job. Ecolab is going to fire his ass if he draws down Ecolab's entire treasury 5 or 10%. He's losing his job. Now, I'm an Uber driver. I can draw down my treasury 5 or 10%. I don't even blink. I don't even want to tell you how much I have driven it down at one shot before. But I'm learning a lot because of that. But here's the deal. So the bonds. So if you're holding stocks S&P 500 or whatever, if you're holding stocks or S&P 500 over the last couple months, you lost more than 10%. I mean that shit was dropping 5-10% a day last week or whatever, right? Like you. So that's why they have the bonds. So for two reasons that they have the bonds in there, 40% bonds. And first of all, this guy was 70-30. He's a little he was frisky, right? He's like he wanted to get a little more gains, so he upped the equities, the stocks to 70% from 60%, and dropped the bonds down to 30%. He knows the bonds are trash, but he's trying to reduce the volatility so he doesn't lose his job. And that's what the bonds are for. And the other thing the bonds do is they create yield, right? The interest rate, and then because he's got to pay out the pensions and shit, right? So he's got out of the corporate treasury, he's got to pay out the pensions and whatnot. So he needs a yield for that, but without having to sell assets. Um, but so we were having a friendly discussion about that's the average financial advisor's approach, but also individuals, right? A wealthy individual, or even just any ordinary individual with their life savings on the line, they don't want to see their life savings draw down 5 or 10%. They might fire their financial advisor. In fact, my therapist was just bragging to me on Monday about how all the shit that's hit the fan with the Trump tariffs, and he's only down like 1 or 2%. And he thinks he's just got a new financial advisor. And he thinks his financial advisor is the best thing since sliced bread because he only lost 1 or 2%. Well, I guarantee you, he's got a super conservative financial advisor. He's probably at least 40% in bonds. And when the market finally turns around, when Trump dies, um, you know, I don't know if he's going to get the full gains that I will, right? So that's another story. But uh, but he, so I was talking to this guy about Bitcoin and gold, right?
Mm-hmm.
Because he's like, well, okay, like what do you do then? Like you're obviously not doing. I'm telling him I'm not doing bonds. And he's like, well, what do you do? How do you beat the S&P 500? And I didn't say this, but I should have led with this. Here's how you beat the S&P 500. You just buy the Nasdaq. That's it. You buy the Nasdaq. You beat the S&P 500. You're done. You already won. But you can do better than that. You can also just buy gold. Gold since 2000, when Bill Clinton left office, because that was the last time the budget was balanced. The federal budget has not been balanced since Bill Clinton. And I think the S&P 500. You can fact check me on this while I'm babbling, Jack. But I think the S&P 500 went up 300 and some percent, 360 or 390% or something since
I'm sorry.
since in the last 25 years.
You want to
The
know what the
S&P,
S&P's done?
yeah, since the year 2000, the last 25 years. I think it's about 300 some percent. And gold has been up 1,000%. You can fact check that too. I probably saw it on Twitter. Probably someone trying to sell me gold. I don't know, but um, gold, but now, so it's just gold beats the S&P 500 as well. So you could buy Nasdaq and gold if you want, 50-50 each. And now you're even more diversified. And I was like, Bitcoin annihilates the S&P 500. Like it's not even close. And I have a here, Jack. I'm gonna text you a
Yeah,
picture.
so in USD terms, gold has grown 9.99 times since 2000, significantly outperforming the S&P 500, which has grown 4.34 times during the same period. This indicates that gold has more than doubled the returns of the S&P over 25 years.
Right, and I just texted you a chart. It's a screenshot I took, and it shows the CAGR. It's got year 1 through 14, the CAGR of Bitcoin, gold, and the S&P 500. Right. So in the last year, Bitcoin's gone up 27%, gold's gone up 37%, and the S&P 500's only gone up 5%. You look at 2 years, Bitcoin's gone up 173%, gold's gone up 61%, S&P 500's gone up 29%. Is this per year or is this cumulative? I think this is cumulative. I think. Um, and so both Bitcoin and gold are outpacing the S&P 500 the entire time, except for there's a sweet spot. I think year 11, year 11 through 14, S&P 500 is ahead of gold. But if you zoom out even more to 25 years, gold is still ahead of the S&P 500. There's just a little bit of time where the S&P surged ahead, and that I think 15 years ago was 2010. So that was after the great financial crisis. Stocks were so beat up that they rebounded quickly, and that's catching the rebound in the stocks. So they did a little better from there. But if you zoom out all the way, gold actually does. Um, and it depends, right? Because there's if you look at another snapshot of, let's say, 1980 to 2000, gold went down. Gold hit a high of $875 an ounce in 1980, and it didn't see that high again until 2008. It took 28 years for gold to break a new all-time high. And why was that? It was because gold is a shitty investment. Oh, this reminds me. So I'm talking about gold to this fucking dude who probably has a PhD in finance. I don't know. I should have dug deeper into his education and what exactly his role was at Ecolab. But basically, he was part of his job was, or he was managing the treasury. I don't know if he's the only person managing treasury, but he managed the treasury. This is a $70 billion company, so I imagine it has a pretty big treasury. And and he was telling me, oh well, the problem with gold is it doesn't beat inflation. And I was like, what? Dude, are you fucking kidding me? Gold went up like almost 40% last year. it went up like 37 or 39% or something in the last 12 months in 2024. And he's like, oh, that's just recently. I'm like, yeah, but gold's been beating SP 500 for a while. Like, and you can compare. And the thing is, gold was fixed before 1970, so it really doesn't count before then. But like from 1970 and 1980, gold went up like 25x. It went from like 38 or 35 or $38 an ounce to $875 an ounce in 1980. It was at least a 20. It was like a 25x. I don't have to do you can do the math at home. Jack, you can do it if you want. I don't know, but like gold went up a lot during the 70s. The S&P 500 did not.
Mm-hmm.
Pretty flat during the 70s. I mean, it was kind of a roller coaster of recessions and shit. But gold did 25x. It was like bananas in 19 and it was slow. Like I said, from 1980, it hit a top at 875 in 1980, and didn't see 875 again until 2008. Took a long time. That was a 28-year sideways for gold. And I think a lot of people, I think there's a lot of like finance professionals, they wrote gold off. If you were coming of age in 1980, like let's say you were born in 1960, right? So, and if you're born in 1960, that already makes you 65 years old. So, if you're 65 years old and you're still working, you're probably at the top of your game, especially if you're working in finance and investing. You're in charge, right? You've been working for 40 years and you run shit. But the problem is, for 28 years, gold was garbage during your career. If you started your career in 1980, you're like, oh, gold 875. You probably even bought the top because you looked at gold and you're like, holy shit, this shit's up 25x over the last 10 years. I'm going to buy some of that. You probably bought the top of gold as a young buck, and then gold just went down for 20 years straight. And you're like, oh, fuck gold, right? And you got into stocks, and stocks did great. So you're like, okay, stocks are good, gold is bad. Do stocks and bonds, just like Benjamin Graham said back in 1949. Benjamin Graham called it stocks and bonds. The thing is, when Benjamin Graham wrote that shit in 1949, bonds were gold. In fact, they were better than gold because you were getting an interest return on your gold. You can, in fact, you could choose to receive when your bond matured. You could choose to receive either the dollars or the gold. The dollars were gold, and you're getting an interest rate on it. So like that was a baller investment. Like fuck, I would have gone 60% bonds, 40% stocks. Like hold gold and get interest rate on. But the problem is gold was fixed, so it didn't really go up. Now gold goes up, but you can't get interest rate on it anyway. So so you just gotta realize that. So the title of our episode is Smooth Seas. What is it again, Jack?
A smooth sea never made a skilled sailor.
Right. And so you know, you just got to realize gold is not a smooth sea either. Stocks are not a smooth sea. Crypto's not a smooth sea. Apparently, bonds aren't even a smooth sea. Apparently, bonds like change prices and shit. Look, I'm an Uber driver. Here's what I know about bonds: they're dollars, and you earn a yield like 4% or whatever. But the government increases the supply of dollars by 10% a year. Therefore, I'm getting fucked by 6% a year. So I don't want bonds. That's the beginning and end of what I know about bonds right there. I'm serious. Like I'm as ignorant as can be. Just about anybody who knows anything about bonds knows more about bonds than I do. But I don't need to know more because I know math. And if the supply is increasing at 10% a year, this is the tokenomics. This is the tokenomics of the US dollar. I learned about tokenomics from crypto. And you can learn about it from stocks too, because they can increase the shares of stocks through dilution. They create new shares, and then which is different from a split. But we don't need to talk about that right now. But um, anyway, I'm getting off track. So basically, oh man, I'm getting way off track. I'm sorry, got derailed.
Well, getting back on track, how
But
does
getting
it?
back on track. So like, I'm not buying bonds because to me, like, I'm just losing money with bonds slowly. No, I'm gaining USD. Right? You gain 4% a year USD. That sounds great, right? Like, and then rule 72, 72 divided by four. What is that? 10, 15 or so. 16, whatever. Every 28 years, you double your USD. Oh, sweet. And it never draws down. not only you're never having a 5 or 10% drawdown, you're not even going to have a 1% drawdown, right? It seems solid. And it used to be backed by gold as well, and it was perfect. But now, when they're printing 10% new dollars per year, well, in 7 years, the purchasing power of your dollar is cut in half. So, um, and 4% a year for 10 years. Well, I'm bad with the math, but basically, if they're making 10% new dollars and they're only giving you 4% of that, you're basically only getting 40% of the new dollars, right? If you were getting
Mm-hmm.
the full 10, if you were getting the full 10% yield, then bonds would be fine. I would be like, okay, that's a safe place to park money, right? Because they're making 10% new dollars, but they're giving you 10%, so it's a wash, right? That I would be okay with that. I would then hold bonds, not to make money, but at least not to lose money, right? Like I would just be like, okay, that's
Well, and
that's reasonable,
it depends on the type of investor that you are,
right?
right? So bonds have a place for. Finally, I found that chart that you sent me. I was trying to find it so I could put it up, but I couldn't
Right.
find it anywhere. Anyways, the it depends on the type of investor that you are, right? Like I am the type of investor that has a high tolerance for risk, and I desire to grow my investment as
Yes.
rapidly as possible. And I
Yep.
am willing to take on more risk as a result. But then again, my savings are not as uh, robust
Yeah.
as certain other investors. And if I was in their shoes, right, if I had serious capital to deploy, well, yeah, now I'm worried more about risk.
Right.
When you start to grow your stack to a certain size, you go from I want to grow this to I need to protect what I've got. I can't lose this.
Right. Once you have $100 million, you don't need another $100 million. You need to not lose that $100 million.
Right. So, if you're that type of investor, it makes sense to buy some US government debt that you can, keep from any drawdowns, like you said, and you can earn money on it. It's a safe place to put your money, or it
Dude, I
has
think
been,
right now, I think Warren Buffett has like $400 billion of bonds.
right?
I think he might be the single largest bondholder on the planet of USA government bonds.
Which, I mean, I guess if there's going to be somebody that's got that much,
And also,
he's
the reason he's doing it is because he's waiting to buy the dip on the stock market.
sure.
That's why he's doing it. He's still like he's a stock guy. He doesn't give a shit about bonds.
Hmm.
He's just holding his cash in bonds for now while he's waiting for the stock market to crash. And he was right as fuck. He's been preparing for this crash that we're having right now. He's been preparing for it for like a year. Like he's
Gotcha.
been selling off his stocks. Like he was the biggest shareholder of Apple stock, I think. He's been selling off Apple stock for like 12 months,
Hmm.
just preparing for this shit. He knew it was coming. He's a beast, dude. He's like the best investor of all time. But
Well, he's not.
no, he's not. And he doesn't even beat the S&P 500 anymore. But again, he's trying to be conservative, right? Dude's like 95 years old. He could die. His best friend and coworker Charlie Munger already died. And did Warren Buffett retire? No, he's still fucking working. I don't know why, but he's conservative, right? He's gonna die with it. He doesn't want right now. He's
Oh,
just
come
trying
on.
not lose that giant pile of cash he has. And I don't know what he's gonna do with that. I think he's gonna give it to charity. Um, which I'd be pissed if I was his kids. Actually, I'm sure his kids are fucking rich already anyway. It doesn't matter. But and that's actually what he should be working on is how to allocate the shit to charity at this point. He's gonna die any minute now. But for me and Jack, we're still hoping to grow our stash, and so we're for me. So I was talking to this Ecolab guy, and he he's like he's under the impression that gold doesn't beat inflation, which is ludicrous. I don't know where he came up with that, but I can only imagine that's what people were saying from 1980 to 2000 as gold was going down and sideways for a long time, right? So that and that cemented in their minds for 20 years that gold is garbage, right? But they didn't look at it from 2000 to 2025, and they didn't look at it from 1970 to 1980, and they didn't look at it for the last 5,000 years. Gold is not garbage at all, and I'm making gold. So we're having rough seas. I'm a rookie sailor, and I'm sailing these rough seas. I'm just an Uber driver, and And I decided, like, okay, like Trump is making these seas rough as fuck. Crypto is already all of the seas in crypto are rough already. Stocks usually are pretty smooth unless there's like, a recession like COVID or
Mm-hmm.
the 2008 mortgage crisis or the dot-com bubble in 2000 or whatever recessions before that. Other than that, stocks are pretty smooth. And if you zoom out, stocks are basically up and to the right forever. Like the S&P 500 and since 1865 or whatever. Um, and But we're in rough seas right now with Trump and the tariffs and trying to onshore manufacturing and whatever other nonsense they're trying to do. It's rough seas. So to mitigate the rough seas, I don't want to have 50 to 60% of my portfolio in stocks. I just don't. The stocks are too rough right now. I don't, like it to me, stocks are risky right now, like even more risky than Bitcoin. And so I've got my portfolio set up right now where it's 33% Bitcoin, 33% gold, 33% stocks. Now, that's what I'm buying on my DCA. My actual holdings are different than that because my crypto has gone up so much. My it's more like I have like 10% stocks, 10 actually like 5% stocks, 5% gold, 90% crypto. But that's just because my crypto's grown and I'm not rebalancing. And the reason I'm not rebalancing is because why am I going to chop a leg off my fastest horse and sew it onto my slowest horse and expect that slow horse to run faster with this leg, right? All I'm doing is crippling my fast horse and adding more to my slow horse. Like that's just dumb. I'm just gonna let that shit ride. And also I don't want to sell it and pay taxes. I'm just like, you know what? I'm not a trader. I'm not trying to, and I'm trying to become more of a trader. I'm trying to, because it would be nice to be able to like sell the top and buy the bottom and shit like that. But mostly, honestly, what I'm doing, if I'm really honest, I'm a dumb Uber driver. I just dollar cost average every fucking week, and I just hodl and as long as I'm in good assets, this should work out. And what I call good assets are assets that I think are fundamentally sound that have been around for a long time, will be around for a long time. And the price charts, like to me, the price chart matters more than anything else. Like you can use technical analysis for day trading, but you can also use it looking at 100-year time span, at 1 year candles, and it works the same. Like I can zoom out on gold from 1970 and be like, oh, you know what? Gold's been up for 55 years since 1970. It's on blue sky breakout, and it's probably going to keep going up because China and Japan and Brazil and Russia and the United States and every fucking country is buying gold where they used to hold U.S. government bonds because those countries are figuring out what I've already figured out, that hey, I'm getting 4% more dollars, but the United States is printing 10% more dollars. I'm getting screwed. Maybe I should buy gold instead. And maybe they're buying Bitcoin. No one's really Bitcoin's kind of a big game of chicken right now for how much people are not buying. Oh, Michael Saylor is the only one really buying Bitcoin in size. Nobody else really is yet.
Which
But
gives him a distinct advantage.
yeah, I mean that dude's cornering almost 5% of the supply already. I
I think he's got more than that, doesn't he?
think he's got 500,000 Bitcoin, which I think is 2.5% of the supply. And he doesn't own it all personally. Like that MicroStrategy owns it, strategy now, and the shareholders. And although he's emphasized that the shareholders own stock in the company, they don't own the Bitcoin.
Sure.
But he doesn't own the Bitcoin either. MicroStrategy owns the Bitcoin. He's just the CEO of MicroStrategy. Anyway, that's another tangent. We don't need to go on this episode, but
Just so you
um,
know, I've got that chart up now. The Bitcoin, Gold, S&P returns over 1 year, 2 year, 3 year to 14.
yep,
Just so that everybody
yeah,
can see it. Now that we know, now that you can all know what he was talking about, because that would have been too much
yeah.
for me if I wasn't able to look at it.
As you can Bitcoin destroys everything for the most part. Like you can cherry pick some years, right? Like you can look at exactly 4 years ago, Bitcoin, that was probably the top, right? So if you bought Bitcoin then, you're not doing great. You're still beating the S&P 500. Even if you bought the exact top of the bull market 4 years ago, you're still beating the S&P 500, right? But
Hmm.
any other time you bought Bitcoin, you're beating both the S&P 500 and gold. except for this last year, gold's doing really well, and gold is beating this P500 most of the time, except for when the stocks were bottomed out 14 years ago after the financial crisis. But like I said, if you zoom out farther, like let's say to the year 2000 or to the year 1970, gold will outperform the S&P 500. And although I'm not sure about that stretch from 1980 to 2000, the S&P 500 outperformed gold during that stretch. And that's the thing, like the S&P 500 and gold are both reliable horses. That's what I'm trying to say. The S&P 500, that's a reliable horse. That horse has been running this race since the Civil War. And you know what? It's a reliable horse. It does a good pace. It slightly beats inflation, I think. And yeah, I mean not last year, but over 2 years returned 30%. 3 years 20. I mean it kind of beats inflation, maybe. I don't know. It's up
I
92%
mean,
in five.
again, it goes back to what kind of investor are you, right? Like everything has a good, gold has its place for people.
Yeah,
They're
that's
looking for it to do a certain
a safe
thing for them.
horse. Yeah, S&P 500 is a good safe horse. Like it does pretty well. So does gold. Both. In fact, if I was going to make the most conservative portfolio possible, I would just go 50% gold, 50% S&P 500. Done. Like there couldn't possibly be a more conservative, careful portfolio. That I mean, you have therefore you have a portfolio of 500 stocks, and you're only halfway exposed to whatever Trump does, and you got half in gold. And I would actually probably add some Bitcoin to it. Maybe like
Yeah,
one
well, clearly you would add, you would
for my
subtract a lot
portfolio.
of most of the gold. You would subtract most of the stocks, and you would inject a lot more Bitcoin
Well, here's
and a
yeah,
bunch of other random shit coins.
right. My current portfolio is, like I said, it's like 90% crypto, 5% gold, 5% stocks. But I'm buying 33% Bitcoin, 33% gold, and 33% stocks. Like if I was starting from scratch, that's what my portfolio would be. It'd be equal sized Bitcoin, gold, and stocks. And then among
Yeah.
the and among the crypto, right? Like I'm like 60, I'm like 65% Bitcoin, like 30 some percent Solana, and like a couple percent shit coins. And that might as well be 0% shit coins. Honestly, like I think a good crypto portfolio is just Bitcoin and Solana with the proportions based on how conservative you are. If you're conservative, more Bitcoin. If you want like some quick gains or you're young and frisky, more Solana. And I think they're both good. Like I wouldn't hold 0% of either one of them. I think it adds a little bit of diversity to the crypto portfolio to have a little bit both of Bitcoin and Solana. And as far as anything else in crypto land, it's all speculative, right? And there's other chains and whatever. Like you can make arguments for all kinds of stuff, and you'd be wrong about some of them, but you might be right about some others. And for me, like crypto's risky enough, and Bitcoin and Solana to me are the most sure bets in crypto. And even Bitcoin and Solana are not sure bets, but they're the most sure bets to me. And since the whole asset class is so fucking risky, I'm personally just going to go with the safest bets in that asset class for me.
Well, and for now, right? Like,
And now, right, keeping an eye on
there's
it.
there are, there's a lot of different factors that can come into play for that. But yeah, like, the great Benjamin Cowan would say that altcoins will not collectively outperform Bitcoin
Right.
until quantitative tightening ends.
Yes.
And maybe not even until quantitative easing begins.
Yes. He's absolutely right. And Solana's down like 50% versus Bitcoin in the last 12 months.
Hmm.
I've been getting killed on Solana. I should have sold Solana when Trump made his meme coin. That's when I should have sold the Solana. But I didn't, so I'm still holding it. But you know what? I bought it when it was less than $20. So if it's 120 or 220, whatever, I'm up bigly, up bigly. So
Bigly.
yeah, so I'm just hanging on to it. Whatever, we'll see. I'll try to sell top maybe, or just hang on to it forever. I don't know until it eventually becomes obsolete and goes zero. I don't know. But so and then gold is gold, and so gold is like my precious metals category. Like I just decided to make to sail these rough seas. I wanted to do one third crypto, 1/3 precious metals, and 1/3 stocks.
Mm-hmm.
Like that, just to make it as balanced as possible. Like I'm on my boat, trying not to get seasick. My boat is getting tossed by these waves. I'm just trying not to fall overboard, right? I'm just trying to hang the fuck on, right? And so I thought, you know what, the best way to smooth it out is to smooth out my sizes, right? And so among the precious metals, like there's gold and silver. Gold comes out of the ground at 2% a year. Silver comes out of the ground at 5% a year. Now, if these were cryptos, like the 2% a year is better, right? And
Mm-hmm.
just like, you know, simple as that. So I'm done with silver. Why buy silver when I can buy gold? And if you look at the history of the silver to gold ratio, you know, you go back 1,000 years, it was 10 to 1, 10 ounces of silver for 1 ounce of gold. And if you go back 100 years, it was when the United States was making money out of gold and silver. It was the silver dollar was an ounce of silver,
Mm-hmm.
and the ounce of gold was a $20 bill, right? So it was 20 to 1. And why did it increase from 10 to 1 to 21? Well, because there's more silver in the world, because we mine it faster, because it's more common in the Earth's crust. And and then there's other precious metals, right? There's platinum, there's palladium. The only interesting one to me is rhodium, which is even more rare than gold. Like rhodium is like scary because of how rare it is, and it can pretty much it could be like the next gold, but like it's not publicly traded. Like it's not traded on the stock exchanges. It's not stockpiled anywhere. The largest stockpile of rhodium is the junkyards of North America because they used it in catalytic converters for gas powered cars. And I'd be investing heavy into rhodium if gas powered cars are going to continue to be a thing. But I think they're going to phase out over the next few decades for electric cars. And I don't know what other use cases there are for rhodium. There's probably rhodium wasn't even discovered until like 100 years ago as a metal, as an element. Like that's it's a new thing. So humans haven't made all that many use cases for it yet, which is another interesting thing. But when use cases are made for it, or if people start using it for money, it's going to be a big deal. And the thing is, when they now, I read the Wikipedia page for rhodium, and if you read that, you'll come across the fact that as they mine rhodium, they also from the ore, they get platinum, palladium, and silver, and other platinum group metals. And they're trying to get the rhodium because there's a shortage of rhodium everywhere all the time because it's so fucking rare. And so they're when they someone and there's no stockpile to purchase rhodium from. So if some SpaceX or whoever company needs some rhodium, they got to go fucking mine it. And so there's all this rhodium mining going on to get the rhodium, and it produces an excess amount of platinum, palladium, and silver. And platinum, palladium, and silver are not holding their value at all. Like the charts look terrible versus gold. So if you for precious metals, to me, it's gold and rhodium. And gold is like the Bitcoin, and actually it's really the other way around. But to me, rhodium is kind of an altcoin. It's the new kid on the block, right? Kind of like Solana's the new kid on the block in the crypto world, where Bitcoin's like the original precious metal. Bitcoin's the original crypto. Gold's the original precious metal, right? Like um, other metals are not as precious or as rare or as valuable. Um, and platinum actually is more rare, I think, than gold in the crust, but because of just the way geology is, like the way they pull rhodium out of the ground, it pulls extra platinum with it, which makes the platinum market flooded with a larger supply of platinum than there would otherwise be if there wasn't rhodium mining. So long story short, that's the precious metals. And then stocks, like I said, if you want to beat the S&P 500, buy the NASDAQ index. Done. If you want to beat the NASDAQ index, what I do is I look at the stocks within the NASDAQ and within the S&P 500. But NASDAQ's easier to manage because there's only 100 of them, right? Because what is the S&P 500 NASDAQ? It's just an average of the stocks in there. It's market cap weighted, but it's just an average of the stocks that are in there. So every stock that's in the S&P 500 is either going to do better or worse or the same as the S&P 500. So all I got to do is look at the charts. I just got to look at, and it's easier with the Nasdaq because there's 100 of them. So let's just say the Nasdaq. There's 100 stocks in there. You know, maybe 33 of them will do better than the index. Another 33 of them will probably tie the index, go sideways with it, and another 33% will do worse than the index. That's just, and I'm making up those numbers, right? It could be 55 and 45 or whatever, right? Like, but some of just because of math, some of the stocks will beat the index, some of the stocks will lose to the index, and some of the stocks will tie the index. So all I got to do is look at the 100 stocks in there. It's going to take a little bit of time, but you can do that in a day. Just look at the charts of the last, whatever time horizon you want, 1 year, 5 years, 10 years. Just look at the charts. Like, what did the NASDAQ do? What did Apple do? What did Amazon do? Right. And I just start at the top, start the biggest market caps first. NVIDIA, Apple, Microsoft, Google, Amazon, Meta. And those stocks are the biggest because the cream, according to Invest Answers, James at Invest Answers, the YouTube channel, that the cream rises to the top. Those are all the biggest companies because those are the best companies, and they've been bid up and bid up by the market. And now they're the largest market cap companies, and they make the most money, and they deliver technologically advanced products that don't cost a lot to spread to the rest of the world because it's just software mostly, and hardware and whatever. And they got the AI narrative, data centers, and all that. All those companies are involved in AI and computer stuff, um, they all have fairly low debt compared to their market cap, which is the thing I look at. And they all have good cash flows, so they could pay off their debt if they wanted to pretty quickly, like within a year or so on average. So that it's all good. And they make good earnings. Like the price to earnings ratio is something reasonable, except for Tesla and Palantir. Palantir's price earnings ratio is like 500. But you know what, Jack? I'm still buying it. I don't give a shit. I'm still buying it. Why am I buying it? Well, because it's up 800% in the last 5 years. Why else? Well, because they do AI stuff and they do software stuff and they do defense. They do national defense. And you know what? We're probably going to need it with Trump's dumbass in charge, right? So I'm buying Palantir. But I'm dollar cost averaging, right? I'm not lump sum buying it. Like I'm not buying a giant percentage of my portfolio in Palantir when it's a 500 price earnings ratio. It's expensive. It's expensive as fuck. So I'm just dollar cost averaging, and I just let the market decide. And hopefully the reason their price earnings ratio is so high is because the market expects their earnings to go up. Right? The price earnings is 500 right now, but if their earnings goes up 100x, then their price earnings ratio is now 5. And I don't know if the earnings is going to go up 100x, but it might go up 10x. I don't fucking know. And it's a $200 billion company right now. If it becomes a $2 trillion company, now Apple and Apple, Google, Apple, Microsoft, and Nvidia are all $2 or $3 trillion companies. So if it becomes as big as one of those companies, well, then still goodbye. But and it's expensive. I wouldn't recommend anyone buy Palantir right now. Really, I'm just dollar cost averaging like $2 to $5 a week or something because I'm poor and whatever. Don't listen to me. But I just look at like the Nasdaq and I just look at each company's charts. Like, cause the bottom line, the most important thing besides price earnings ratios and debt and income and blah blah blah, is what is the price chart doing, right? If you look at a company, like there's companies I like, that don't. Yeah, I like everything about them. I like the money they make. I like their low debt. I like the products they make. I think they're a cool company. But I look at it compared to them. They don't beat the Nasdaq, right? The Nasdaq might go up 20%. This company only goes up 5% in a time period. I'm like, oh, we'll zoom out further, and then it's still like Nasdaq. And you just zoom out, zoom out, and zoom out. 5 years, 10 years, 20 years, 30 years. 1 year, 2 or 3 or 4 years. No matter how many years you look, this company, for whatever reason, the Warren Buffett's smarter than me. The rest of the people in the market are probably smarter than me in most ways. But for some reason, but the price doesn't beat the index. If the price doesn't beat the index, I'm not buying it unless I think it's going to change and all of a sudden it's going to beat the index. That's another thing. But if it's a company that's not necessarily changing anything, like Costco's not going to change shit. Now Costco actually does beat the index by a little bit, so it's not bad, right? But Costco's not going to have a breakthrough in AI technology anytime soon, right? They're not. They're not. Costco is not going to 100x their earnings next year. They're not even going to double their earnings next year. They might, go up whatever percent they go up, 9%. I don't fucking know. But so, but you can, like, you don't have to go outside the index to beat the index. You can go right within the index, pick out individual stocks within the index that beat the index. And then guess what? Now you're beating the index. It's as simple as that, right? Like I'm buying a handful of stocks. I buy like 5 or 10 different stocks. My favorite stocks right now are Tesla, Nvidia, and yes, I know that Elon Musk is a Nazi, and yes, I know that Elon Musk is stealing old people's health insurance and Social Security. And yes, I know that Elon Musk is firing your brother from his job, and Elon Musk is taking away medicine from sick people. I understand all that, but he's also the best engineer on the planet. And his company makes the most innovative products on the planet, and will continue to do so for a while. And maybe I still should not invest in Tesla, but greedy. I need money, and I can't help myself. So for now, I'm investing in Tesla. I've to make everyone feel better, I have lowered my Tesla position. I had too much Tesla, and Tesla nosedived from $498 down to 200. So that sucked. But I sold some of my Tesla and bought more Bitcoin and gold with it, and other stocks. But so Tesla, Nvidia, are my top two stocks, and they've both done, like, in the last 5 years, they've both gone up. I think Tesla was up 600% in the last 5 years, and Nvidia's up like, I don't know, 1100% or something. I mean, these are all things you can check, but and I could too, but I'm too busy talking. And then Palantir and Broadcom, AVGO, Broadcom and Palantir both up 600 some percent in the last 5 years. There's one other company. It's embarrassing, but First Solar. And First Solar is up like 260% in the last 5 years, but it's taken a huge dive lately. And First Solar is interesting. So I mean, I'm an environmentalist, so I want First Solar to succeed. And it's an American company and makes solar panels in America, and generally gets outcompeted by China. But maybe there's the tariffs in China might help First Solar. Biden was trying to help First Solar with subsidies, but Trump will probably end those. But maybe the tariffs will help instead. And First Solar turns a profit. They don't have a lot of debt. They're a profitable company. The price earnings ratio is down to like 9, and it was way higher than that before. And then the stock's been dropping, and now their price earnings ratio is like 9. But they have a backlog of orders for 2 years. They just keep going. I keep buying the dip on First Solar, and it keeps going down. Whatever. I'm just dollar cost averaging, buying a couple dollars of First Solar every week, and just stop looking at it. And that's how I'm navigating these seas now. I'm like, you know what? I have these quality companies that have done well in the past. They should do well in the future, like computers and AI and whatever. Like, these are things that should do well in the future. They have done well in the past. There's no reason they won't do in the future, except for, Trump, which is why I don't have like 70% stocks like Ecolab does. Because Jesus Christ, I'm not putting 70% of my life savings in Trump's hands, right? You got to understand, the entire American stock market is in Trump's hands. He can, send it down 10% a day every day for who knows how long. He can, he's like, you know what, I want 100% tariffs on every country all the time, and if that sticks, like, all the stocks are going down a lot. Like, so I don't want my life savings to be in, even though stocks have been safe for 150 years. That wasn't. They were safe until Trump became president. So so that's how I'm navigating. That's how I'm navigating these rough seas. Like, even if the entire American stock market goes to zero, I still have 2/3 of my money. The entire American stock market can go to zero, which it won't, obviously, right? And maybe there's a giant gold reserve found in Montana, where there's 1,000 times the known gold reserves, that 1,000 times more gold than has ever been mined in the entire planet's history is right beneath the surface in Montana, right? Which is not going to happen, but let's pretend it did. And gold price, went down 99%. So what? I still have 2/3 of my money. Bitcoin and stocks. And what if Bitcoin becomes obsolete? What if everyone decides Doge is better, or a new proof of work chain like Caspa is better, which is probably not happening, but let's pretend. And Bitcoin goes to zero, which it probably won't. But if it did, I still have 2/3 of my money. So like in any like, I feel safer that way, right? Like all the crypto go to zero, I still have 2/3 of my money. All the stocks go to zero, I still have 2/3 of my money. All of precious metals go to zero, I still have 2/3 of my money. Um, so that's how I'm navigating. What about you, Jack? I've been talking a long time. Why don't you talk?
Oh, well, I don't have the same stool that you do, but I have a portfolio as well. It's down in general. I was able to increase my positions, and I'm now keeping some cash on the sidelines. Like I moved to about 15-20% cash
Mm-hmm.
just to have on hand because it's like, you're buying the dip. Well, at a certain point, you run out of money buying the dip.
Yeah, you got to have cash to buy the dip.
And so, I used this opportunity when I saw that the market was going to go down further than it already was.
Mm-hmm.
I decided, well, okay, I'll just sell 2/3 of my stocks and move to cash. And when I think it bottoms, I will put my money back in.
Okay,
So,
so you 2/3 of your stock, but you only have 10 or 15% cash. Where'd the rest of the money go?
well, I put it back in at the bottom.
Oh, okay. You did like a just a little sidestep with it, and
Yeah,
then
yeah, I was going down. I knew it was going to go down further. Bad news on the way. This, that these tariffs are going to go into place tomorrow for sure. And it's
mm,
like, okay, well, then the market's going to sell off tomorrow.
right.
And so I, yeah, I moved to cash, waited for, a couple of days until I thought it was bottoming and put money back in. Most of my positions are up.
Nice
Um,
move.
yeah, I mean, it was, I should have, no, I should have done it a long time ago. Like we talked about this in the last
So,
deal, is that I should have recognized that that's where we were sooner. Moved, you actually told me at one point you're like I sold all my Solana, or something like that.
yeah, I did that once. Yep.
And so like when that happened, I should have. That's when we both of us that would have been the time.
Yeah.
That was the time to move more of
Trump's
our
an
assets into cash. And then yeah,
and
we
we're still learning, right? Like it's
yeah
okay.
yeah
Like
yeah yeah
we can,
that's
and that's why we need to look back and say, okay, when because obviously, right? Everything's down like 10, 20, 30, 40, 50%.
hmm
When was the top? What was Trump's inauguration was the top
yeah.
for all of these assets.
Which, by the way, if you're looking for signals and tells as to what's what, again, I'll go back to Benjamin Cowan because that was his prediction long before Trump took office.
Yeah.
Was that January 20th would be at least a local top.
Mm-hmm.
Turns out it's so far the top.
Yeah, Benjamin Cohen is so right. Like of all the people who are right a lot, Benjamin Cohen is right a lot.
hmm
Like all the time. But so okay, so you have 15-20% cash. What percentage is stocks?
let's see here. I mean, most of it before. So, and the thing is like I moved some money to cash, but like because of the move that I made, like I basically have the same amount of USD now in my stock as I did before, but now I've carved out, 15-20% cash. So that's kind of a nice deal.
No.
But like, let's see here.
Well, what percentage have gold, what
Uh,
crypto,
yeah.
what
So I'm trying to do the
real
math.
estate?
I'm really bad at math, and I'm going to exclude my real estate here for a second, and I'm going to
Okay.
say that my portfolio is like um 20% crypto, um,
Actually.
and then 15% cash.
Okay. So you've no gold.
I have no gold. I don't understand gold. I'll just buy more Bitcoin. And so uh, I you know I,
I was doing that for a while too, Jack. One thing I noticed was that countries are waking up that hey, wait, maybe these USA government bonds are dumb to hold. And countries are waking up to that, like specifically China, Russia, Japan, Brazil, India, Saudi Arabia, all kinds of these countries. And but they're not buying Bitcoin. They're buying gold.
Yeah, that's fine. I'm not going to. You know, but it's
Right.
not everything's not for everyone,
They might, and they might buy some Bitcoin. I mean, the thing is, Bitcoin is the new gold, right?
to me it's
Gold is the old gold.
to me old gold, that's a pretzel type. I feel like the you know like the thing I mean the reason why I think it's a good idea to buy Bitcoin instead of gold is because nobody's buying it right now. I mean there are people that are buying it, but like a very small percentage of the
Yeah, no, I
population is
feel like,
even really aware of it, and so like I feel like now is the time. Like we're still so early into Bitcoin.
right.
We're comparatively way late when it comes to gold.
Yeah, we're 5,000 years late. And gold's market cap is what, 19, 20 trillion, and Bitcoin's market cap is like 1.9 or 2 trillion. Like gold is 10 times more expensive than Bitcoin, and and Bitcoin and gold is on blue sky breakout right now. I think it's going to still run for a while, but Bitcoin, Bitcoin is on sale. Bitcoin is like 20 or 30% off from its all-time high still, even right now.
Hmm.
Um, even though it's been going up for since this tariff shit. Like gold, Bitcoin is starting to mature, right? Like Bitcoin used to trade a lot like a tech stock, right? But tech stocks have been getting slammed by the tariffs. But Bitcoin is not. In fact, Bitcoin's up, I would say, about 10% in the last week. I just on my recollection, because it was hovering around 75, 80,000. Now it's at hovering around 85,000. It's up a little bit. And gold is way up. Gold looks amazing. Um, well, the Bitcoin Standard by Safety and Moose, I thought, did a pretty good job of explaining gold. And I guess I've done more research on gold besides that as well. I've there's a documentary series by Mike Mahoney, I think is the guy's name, and Mike Mahoney is a guy who actually sells gold and silver on his website, right? But unlike Peter Schiff, he also is a Bitcoiner. Like he likes both, like I do. I actually like both. And the reason I like both is there's some law about if something's been around for a certain amount of time, it'll probably be around again for that amount of time. Gold's been money for 5,000 years. I really think gold can be money for another 5,000 years because it still has its chemical properties, right? I think gold is an analog money, and I think Bitcoin is similar to gold in a lot of ways. It's digital money, and I think both can be money. Like just like gold and silver are both money, right? Gold and Bitcoin can both be money.
Sure.
And the inflation rate of Bitcoin is less than the inflation rate of gold. So if anything, Bitcoin is better than gold. And like Jack said, you're buying in gold, you're buying a piece of gold, or I mean, I'm sorry, you're buying a piece of Bitcoin, you're buying it at a 2 trillion market cap. Whereas if you're buying gold, you're buying it at 20 trillion market cap. So gold is 10 times more expensive than Bitcoin, right? Like if you spend $1 on gold, you're getting 1/20 trillionth of gold. If you spend $1 on Bitcoin, you're getting 1/2 trillionth, which is still a small amount, but it's still 10 times bigger. Put another way, if you spend $1 trillion on Bitcoin, you just bought half of all Bitcoin. If you spend $1 trillion on gold, you only bought 5% of gold, right? Gold's more expensive. You get a bigger piece of the pie with every dollar. You get a bigger piece of the pie with Bitcoin than you do with gold because the Bitcoin pie is smaller. So if you're buying like a certain square footage of that pie, you're getting a higher percentage of the pie. Like I hope that's clear.
Yeah, no, I think it is. I think it is. Do you still, or I know that you had something else on your agenda. Should we be wrapping
Yeah,
it up?
well, you wrap it up. Yeah.
Okay. Well, it was good. It was a good chat. I don't know if you can see the Zoom, or not the Zoom, the stream
Yeah.
image.
Old S&P 500.
Do do you see the smooth sea never made a skilled sailor image that I created?
I do not.
Yeah. So I think you don't see that. You're not looking at the stream. You're looking at the Zoom.
Must be looking at. Oh, I'm looking at my photos. Hold on. Hold on. Hold on.
But
Hold on.
it's in this. Anyways, I've made a thumbnail
Okay.
for the video. I made a couple of them now, and this one's the one for this one. But I for some reason it won't let me add it to the video while we're live. So I either have to make this beforehand so that it's in place before we start, or just deal with the fact that it'll be the thumbnail from the previous video that's displayed while we're live until I put a new one on there later, which annoys me. But anyways, yeah, it was a good chat. Navigating the rough seas. There's just going to be more rough seas ahead.
Yeah. So
There,
you're going stocks, Bitcoin, and cash. I'm going stocks, Bitcoin, and gold.
and that was me removing my real estate from the equation. Now,
Yeah. Me.
if I add my real estate to the equation, really it's like I don't know, um, 98% of my is in real
Real.
estate,
Yeah. Yeah.
and
Me
then I
too.
keep like a very very small fraction of it in actual anything else. So,
Right.
anyways, yeah. It was a good talking to you, man. For those of you who are checking us out, we'll be live again. We do this once a week, usually on Wednesdays. Today's Thursday because of a birthday that needed to be attended to. So uh, thanks for checking us out, and we will catch you guys next time. John, do you have anything you want to say for final words?
No.